Hey people, how you doing out there? Doc Severson with you here, Ready, Set, Crypto. Our webinar series that we've been doing, now this is our second week. Today is what is today? The 6th of January, Wednesday, the 6th of January, 2021. And I'm going to be with you here for the next few minutes talking to you about this webinar series that we've been doing. And all of these have been trading related. So what I'm trying to do is use the tools that we have within the platform be able to bring these to you on a just-in-time basis. Love to know where you guys are coming in from. We got Ray coming in from Aiken, South Carolina. I'm right up the road a few hours from there in Greenville, South Carolina. We have another beautiful winter day here. This is what I moved down here for. It's about 50-some degrees outside and sunny, and it is not cold and gloomy and wintry and all that stuff. So it's just terrific here. Love to know where you guys are coming in from. We have Saxony, Germany. We have Lancaster, Pennsylvania, or should I say Lancaster. We have Carlisle, Pennsylvania, Germany, Hamburg. Got to get over there, man. Got to get over there and see some of the German beers. We have Russia coming in. We have Los Angeles. We have Montreal, Canada, Netherlands. I just found out the difference between Holland and the Netherlands the other day. I can't believe that I'm that ignorant about that stuff. San Antonio, Ontario, Canada, Nigeria, Dallas, Texas, Austria, Africa. We got people from all over the world that want to know what's going on with the market today. Let's get to it here, shall we? Okay, so I'm going to hide myself down here in the lower left-hand corner and try to stay out of the way for today's webinar series. I'm not going to be talking about any trades. We don't have to go over that. So once again, I want to remind you guys what we're doing with this series. So we've got just sort of this pyramid approach to things. We want to start off with the intro to technical analysis. That's actually what I'm going to be talking about today. Short-term trading strategies. So how can we put some simple short-term trading strategies together based on what we have? From there, we can build on top of that with fractal energy trading, with understanding what trend trading is, and then we can apply this through options for income, which is what we talked about last week, as well as crypto futures. So there's a lot here. There's just about everything that you can hope or want to do with the market in terms of accumulating. And there's lots of tools at our disposal, but we can't use them all the time, right? We don't want to be doing everything at all the time because we'll never get good at it. So what I want to show you guys is as we kind of go through this, and I know we've kind of done we've gone backwards because we started last week with this one, because that to me was the very best strategy for trying to accumulate BTC in a FOMO market. So what I'm going to do today is kind of go back to the beginning here. We're going to go into the intro to TA section and go through some of the tools that are specific to what we can do about this market for today. So last week we discussed a very simple way to use options to find ways to earn BTC or dollars, depending on the account that you have, even if the price is running away from you. So we showed this great trade, and you can find the video in our YouTube channel. So if the price is here, and if you're selling options down here, you can win whether the price goes up, sideways, down, or even way down. You can still win, and if you're lucky, you get a sign, which is what you were trying to do in the first place. You were trying to buy BTC and used an option to be able to do that. So it's a terrific strategy. It's very simple. It's easy to learn. Recommend, if you've never heard of anything or if you didn't catch last week's session, go back and hunt it down. All right. So today's topic is using price only for TA in a FOMO market. Now, I really don't listen to anybody else's channel out there in crypto. I find that, really it's not all that interesting. Once you get to know something, you don't really need to go looking around for ideas, because once you get it, right? But I can't imagine how tough it is for most of these technical traders in today's market to try to analyze what's going on, because there really is no answer to that. There's no study or tool that you can put on your charts which is going to explain what's going on. That's part of the problem. So for that, there's only one answer in my mind. There's only one answer, and that's used to price only. We have to use price-based tools for TA in this type of market. So we have a massive FOMO market going on right now. I don't think anybody would disagree with that. We have extreme emotions. Demand is massively outstripping supply. This is great, right? This is what we've been waiting for 3 years for. But guess what? It's not going to be necessarily very polite about it. And it's not going to conveniently say, hey guys, would you like to get on? All aboard, let's go. No, it's not going to do that. It's going to run as hard as it possibly can. And every little dip gets bought. And it's just very difficult to get on board. So we've got to find ways to get on board without giving up too much edge. So just aping into a position is not what we want to do. So from a psychology perspective, and this is something I always fall back to because markets are made out of humans. I don't care if it's a bot or a human trader, it's all based on emotion. This current situation right now is the most painful situation if you're on the sidelines. So they've actually proved this. Trading psychologists have proved that it's actually more painful sitting on the sidelines, watching a market go by without you, than actually taking a trading loss. Most people would prefer to just let's get it over with right now, versus that day after day after day, like, oh my God, this thing's getting by without me. I've been waiting years, now it's running out the door. So this is why so many people, they can't help themselves. They finally just ape into the thing. And that rarely works out well. Rarely does it work out well. The other problem is that standard momentum and oscillator studies are getting swamped. Like, well, I watched the RSI, relative strengthening. Well, the RSI is over 90 now. This is overbought. It's got to retrace. And then it's like every day you're like, it's got to retrace. It's got to retrace. It's got to retrace. You end up just being, an auto repeat, and it just becomes meaningless, right? All of these are swamped. They're based on trailing data. So it's not going to necessarily help you. So I do tell people all the time, if they listen, right, that technical analysis, that's what TA is, technical analysis works well about 90% of the time if you're doing it right. About 90% of the time if you're doing it right. It is not for predicting the future. Now, I know I'm going to burst some bubbles on today's webinar with that, but guess what? TA is not for predicting the future. And it did take me a while to figure this out, because at first you think you can. At first, you think you can. You can use these trailing studies to be able to predict the future. And it feels empowering. It feels great until it stops working. And then you realize, oh, it's not for predicting the future. I like what Peter Brandt says here. Charts simply show where market has been in the possible path of least resistance. And that's about as accurate as you can be. So it is for determining the probabilities of the possible path based on previous or trailing price data. It's like following a breadcrumb trail that suddenly stops. So imagine this, you're out in the woods, you find this animal or this whomever left this breadcrumb trail. And so what you're normally going to do is you're going to say, well, he was heading in this direction, so let's just assume he remained heading in this direction, right? That's essentially what we're doing with technical analysis, is we're trying to understand based on the vectors of what's happening in the different forces. If it was heading in this direction, it's likely to keep heading in that direction. Now, we use different ways to it, and I certainly do it as well too, with expansion and contraction, things like that. But guess what? That's not working today. We're in that 10% of the time that none of these trailing studies are going to work. So people are going nuts because the price is running away. TA does not work with a supply and demand imbalance this dramatic. So what do? We're going to use price-based tools. Price-based tools are not lagging. Price always tells the correct story and is the final arbiter of value. You can't disagree with price. You can't say, hey, it's not supposed to be there. It is. Right? I hate to use this expression, but it is what it is. Price is what you see. What you see is what you get right there, regardless of where it is. So you can argue with studies. You can say, well, that's not really overbought. But the price being at a certain level is everything you need to know. So let's get into a couple of techniques, one of which is price patterns. And today I'm hoping to finish up by the bottom half of the hour today. So I don't want to keep you long. We'll be here for just a couple of things, and I'll probably think of several other things that I could have talked to you about today as soon as I shut down the webinar. But I will stick around for questions if you guys think about it, or if you have any, or you want to bring up something. So price patterns are very, very important. It's something that I learned a long time ago, and I actually set up a set of flashcards for these, which are available through the Omnia platform that we have. So I've got like 25 different price pattern flashcards, and it was one of the first things that I created a long time ago. So really what it is showing is that range expansion moves to range contraction, and then it moves back into expansion again, and then contraction again. Price just goes on and on and on. That goes into perpetuity. It never stops. That cycle never stops between the two. Okay, so that's one of my tenets of fractal energy trading. So let's see some common consolidation patterns that we'll see on uptrends. So the first one is the bull flag, and I'm just going to kind of draw these out, and then we'll go out to a chart and we'll take a look for a few of these. But a bull flag is generally going to come from what's called a flagpole, and then you're going to see a very gently sloping consolidation. So bull flag is gently sloping to the downside like this, and it follows my rule number 3 that descending patterns usually break out to the upside. So from that, you get a secondary flagpole, and normally this flag is about halfway in the middle of the larger move. Ascending triangles are also interesting. We see these a lot where the price will go up to a certain level and then come back down and then consolidate. And what you'll notice is that there's an equal set of highs, but a rising set of lows. So equal highs, higher lows all the way along here, and it builds this sort of triangle like this with a 90 degree. So I don't know what the name of that triangle is. I used to know back when I was smart, but so that creates that sort of overhead resistance level, and occasionally you'll get some false breakouts from here. You'll get some false breakouts and it gets hauled back down. But eventually what happens is, boom, explodes out of here. And typically what we're looking for is this level here is essentially this level here. So that this is called a measured move to the upside that we have from that ascending triangle. So that's one that you'll see, and I'll show you a couple of these in a minute. And then we get into symmetrical triangles. This is something where there's a couple of different ones. So again, from a big move like this, you'll start to see lower highs, higher lows, lower highs, higher lows, lower highs, higher lows, like this. And it just sort of vectors into a triangle. Now, a pennant is a very short one, where you just see something like this, and then, boom, it's gone. A symmetrical triangle is typically something that's at least a month long. So it's a much longer consolidation. Drives people nuts, right? That don't know the pattern. If you don't know the pattern, you're going to be going long and then short and then long and short, and you keep getting stopped out left and right. And it just drives people insane. And finally, when they just get sick and tired of being stopped out, they stop trading it. Then it will break out, right? It's one of those where it really takes a lot of patience. Then we have a different version of that, which is a horizontal box, where we have generally about the same. So it's kind of like, it's exactly what you think it would be, but it's a small little range that runs really flat. It's a really flat range with an equal set of lows, equal set of highs, and eventually it breaks out from here. Now, an extended base, yeah, which pattern does BTC have at the moment? It's called an uptrend. That's the pattern right now. No, I'll break that down into some other ones. I'll show you what I'm seeing in the market right now. Now, an extended base is what I'm seeing in a lot of these coins. Like, we have a lot of coins that did this for the last 3 years. So it's built this really extended base like this. And that's a big cut pattern. So typically what you'll see is that the measured move from here is about the depth of the base like this. So we'll look for a measured move to the upside from that. Now, sometimes we also have a smaller version of this, and we'll show you some of these, which is cup with handle. So you'll see a thrust up, and then you'll see the price doing almost like this. It creates sort of a rounded base like that, consolidates at the neckline, and then boom, she's gone. So that's a cup with handle pattern. You can, I mean, there's dozens of different patterns that are out there. Just like there's literally hundreds of different candlestick patterns that you can learn, and just tie yourself into a knot trying to learn all of those. But if you just stick to these, if you just stick to this subset on here, you'll start to see these, or you can use your software to find these as well. So there's a lot of pattern recognition software and charting packages now that can do this. So what you'll notice about all of these consolidation patterns that they use are breakout entries. So they reach up to a certain level and they have some kind of a breakout entry to this. So you can try to enter on some of the pullbacks here. You can try to get a little more edge in the pullbacks once you understand the support and resistance of the pattern. But generally what they're meant to do is they're meant to consolidate before the next breakout, right? So you can get a little bit of edge down here, but I tell you what, for every time that I see something do this, I've also seen them break to the downside first, set up a larger time frame, higher low, and then pivot and just monster to the upside. Just a monster move like that. So we'll see those. So let's go to the charts. What I'm going to do is I'm going to bring up TradingView, and let's clean up some of these things here. Okay, so TradingView, off we go. So some of these, I think, just based on what we've seen here, you might recognize. So if you look at something like this, this is, I would say this is about as close to an ascending triangle as you're going to find. So that's not a bad ascending triangle. Here's a small version of an ascending triangle. Now, if we were to go down to something like a 5-hour chart, this would show a really nice pattern, really nice, construction for something like that. This to me is just simply a little bull flag that's out there. And this stuff is nothing. There's nothing that's in there. This is absolute pure FOMO, right? This is all just FOMO behavior. So TA is definitely going to work better when you have, less emotion to the price action that we see. So here's almost a cup with handle pattern that's building out this base, triangle patterns that are in here. So the bottom line here is, guys, if you're looking for ways to get on board, here was a great example where the price was consolidating under 24,000. Once it took the breakout, it was gone. Range contraction leads to range expansion. And right now we're into FOMO world right now. I mean, there's no way to analyze this, and there's no way. This is what I find the toughest thing about technical analysis is when you get a runaway market. Everybody wants to know, like, hey, Doc, when's the pullback going to come? And it's like, oh, let me check my watch here. You don't know. You don't know when this is going to happen. It will turn on a dime, and there's no study out there that will tell you when it's actually happening. So pattern software, I think most packages have, like I've used, TrendSpider is actually pretty good with stuff like this. I don't use it myself. I don't use pattern recognition software because I've just learned these patterns over the years, and I don't need a piece of software to tell me when I see it. But you can go with, like TrendSpider, I'm pretty sure has got that. I don't know if TradingView has got something like that, but you can check it out. Okay, so let me pull back from that. That's a couple of patterns that we went over. Let's go back to a little bit of death by PowerPoint. And I want to get into Fib retracements now. Now, a lot of you have heard of Fibonacci retracements, and there's a lot of mythology and gunk that's out there going around. I just want to keep it simple with these. These are a price-based way to look for typical landing spots. That's all. So these are pullbacks. In fib retracement, you're going to apply towards a major swing and you're going to look for something to happen. You're going to look for levels, certain levels, and really all that you can do with this is stick your limit order out there, good till cancel, and see if you get hit. Right? Okay, so these are typical landing spots. So the retracements that I use are 38.2, 50%, 61.8. Those are the ones that I use. Now somebody, I almost guarantee somebody will come along and say, 50%, actually 50% is not a fib number. And that's true. But what you will find is that 50% a lot of times will be tested. So markets will go up and they will trace roughly 50% of the entire move before they take off again. Okay, so retracements, that's the pullback that we're looking for. So here's an example of a 38.2 retrace. Here's a typical swing to the upside. And you can see this over here on the left-hand scale, that is the 38.2 retracement. Here's 50%, 61.8. Here's a quick little rule for you as well. If the price comes down to 61.8 and actually undercuts that, it's very likely at that point to fill in the triangle. So you can see the triangle here. So if you get past 61.8, generally you're going to fill into triangle. So a quick little rule for you. So the deeper, the faster the pullback, the more of a slingshot effect that you're going to see. So one of the things that I teach in fractal energy trading is there's 3 ways for a market to consolidate. It can go sideways. It can go down from whence it came, or it can actually grind slightly higher, very slowly, like that. But the fastest way is this one here, because what happens is the negativity gets built up. So all of a sudden you get a market that's extremely negative and all the news is negative because it's pulling back and everybody's flipping out because they aped into the market right here. So everybody's panicking. They're selling out. You got bears jumping on board saying, my God, this thing is going to hit zero. I know it in the next month. And so you get this combustible mixture right there. And when it goes to a deep enough pullback, what happens is you get that, let's give it a different color here. You get that you get the buy the dippers, and you get a wall of demand that comes down here. And all of a sudden, the price starts getting pushed up at market. And this is where the bears get completely out of, they start to panic and they start to buy back the situations, right? So price moves because somebody's in pain. Price moves because somebody's in pain. Either they're in pain watching the thing run away without them, or they're short and they have to buy it back at great pain, right? So a sharp retracement induces a herd of weak hand bears to enter short, temporarily creates a very negative sentiment mix, and you've also got former longs that have weak hand that are selling it out, right? So when the price pulls down to an area of deep demand, the beatings begin. They must buy back their short positions, and that further adds to demand. So you have to understand to some degree the chemistry of what happens during these. So we can also use fib retracement confluence to spot potential support zones for a pullback. So we can combine, see, like a fib retracement with 38.2, 50%, 61.8 for a larger swing, but we can also do that in conjunction with, say, like the smaller swing, like this. And then what we're going to do is we're going to look for the levels to line up. Okay, so let's go back to the chart and see if we can identify anything where we can use some swing retracements here. Okay, so let's look at this one. We have a larger time frame swing. I'm not going to take it all the way down to here, but we can start the larger time frame swing. So I'm just going to go over here on TradingView, pull out fib retracement, and start with what I think is a good starting spot for the current swing, which is going all the way up to there. Okay, so here's my retracements. That's just a single time frame, 38.2, 50%, 61.8. Okay, notice how 61.8 lines up with the former breakout price at 25,000 or just below 25,000. So that's something to keep in mind. Also, the 38.2 lines up with about 29,000, so that would be nice. So we've got these in play. Now what we can do is we can look for a smaller swing. We can look for a smaller swing. And this doesn't exactly look perfect, but we can start to look for smaller swings that are in here. And to me, the last smaller swing got started right around, say, here. So we can pull that up to 0 as well, too. And now what we have is we have 38.2, 50%, and 61.8. Now, these are not going to pull down very far, but what we do have is confluence right around these levels here. So we have confluence at this level here, which is around 32,000. Lines up with the 23.6, which is not a major fib, but we may have some support down here at this level. So what I like to do this a lot. I like to find what I consider to be the major swing and then find a minor swing. Now we can also do this by dragging the major swing all the way down to here. And then maybe we're going to take the minor swing from here and then see if anything lines up. And to me, what lines up there is probably around in this area here at about 27,000. That's in confluence with the 38.2 as well as the 50% on this. Okay, so that is how you identify these landing spots where you think there's a good chance that the price is going to provide a value entry at a place where you get support lining up. It also helps if these line up with what is like pivot support, like what I talked about here at 24,000. If we could get an entry at 24,000, that'd be tremendous. But we're not going to get one unless we sell puts on that, more than likely. Okay. Let's see. Okay. So let's pop out of here and let's finish up. Okay, so some conclusions for today. Again, this is not an exhaustive study of all the price tools that we can use. There's also things like volume profile, which is frankly a little bit beyond today's scope to be able to use volume profile, but it is very, very important that lines up with these fibs. So volume profile is also good. Okay, so when price goes berserk, it's because people have become very emotional. Yes? The standard tools that work 90% of the time will become useless. So it doesn't matter what market I'm trading, whether it's the equities market, whether it's crypto, whether it's bonds, foreign exchange. When markets go berserk like this, it's literally impossible to analyze them because they've gone into 100% emotional state. When was the last time you had a rational argument with somebody that was completely worked up and ready to fight? It doesn't happen, right? You've got to calm them down first. You've got to get them rational before you can understand what they're trying to say. And that's what's going on with the market right now. It's just completely lost its mind, right? I'm not saying this is a bad thing. I enjoy watching this, right? But it's very hard to analyze because it's in this state like this very emotional state, which you're not going to be able to analyze. So what you do is you fall back on price. You can depend on price, and that's the only thing that is rational about the market. So you can either look for well-formed consolidation levels and take yourself into the eventual breakout, or if you like value entries a little bit better, set up a pullback through fib retracements using a limit order, maybe even use volume profile if you have those tools. My favorite way, though, is still selling cash secured puts, which is what we talked about last week. Either way, you win, right? In a FOMO market, and I'm doing this like a crazy amount right now in the equities market, especially on SPACs and those SPACs that have options, is I don't want to ape into these things, but selling puts below the money at a support level is like it's picking up money off the floor. Okay, so if you're just coming up to speed on technical analysis, I have a gift for you. You can go out to ReadySetCrypto.com/free TA and pick up my Introduction to Technical Analysis online class for free. So you may have, I didn't actually go through and buy this thing or test buy it or anything like that. It probably will ask you for your card and then say, oh, you don't have to pay anything. So you will not be charged if you buy this thing. So you can pick it up today. The special will go through this weekend. I want to get you guys off to a good start in 2021. Knowledge should not be an impediment to you making money in this market or acquiring your fair share, which in my mind is 1 BTC. So that's what we're here to help you do. Let me know if you guys have any questions. If you don't have any questions, thanks for coming by. See you next week. I'll stick around for a couple of minutes if anything comes in. Otherwise, enjoy all the fun that's happening in the Washington, D.C. Capitol right now. Okay, let's see. What do I think about VWAP? Some people are like really religious about VWAP. That's really hot these days, volume weighted average price. It's still a trailing indicator, right? It's still a trailing indicator. I like anything that you can measure immediately that's not trailing. Let's see. Crypto Darthmark, hey. I have a question. Is it better to sell puts now, or is it better strategy until BTC gets down? I always, if you have a choice, always wait for the pullback. Always wait for the pullback. If you can't wait for the pullback, then sell puts today. If you sell puts today, you won't get as good of an entry, but it's still better than aping in at the current price, just buying the spot. But always try to wait for a pullback, even if it's, you can put a limit order out there and let we had a hell of a pullback 3 days ago. I mean, it came down to a 38.2 retracement. That was the pullback, and then it's gone, right? So if you can, wait for the pullback, Marcos. Thanks, Rajiv. Thanks, Blake Man. Thanks, DG. Thank you, Richard. Okay, looks like we're done. Thanks, everybody. I will see you next week. Enjoy the show. You guys take care.